Hey, what's up, everyone? Matthew Wilson here with Life Matters, talking a little bit more today about mortgage protection. A lot of confusion around that term in the industry. Let's first start off with what it is. If you recently refinanced or purchased a home and you move in, you're going to get a flood of letters in the mail or little postcards that look something like this, an urgent matter regarding your mortgage. First of all, it's not spam. It's legitimate. It's state regulated. If you don't want those, they'll go away. But if you respond to one, you'll get a call from an agent like myself to see if we can help get some coverage in place to protect that mortgage in the event of a death or an illness. So it is a life insurance product that protects your mortgage or your family and gives you peace of mind and financial stability and strength during a time where it matters most. So that said, let's clear up some of the confusion by giving you a little bit of brief history around mortgage protection and where it came from and what it means today. So years ago, before the meltdown, the mortgage companies used to offer at closing an option. If you purchased a home way back then, you can remember this. They offered an option for you to opt into a mortgage protection plan. Well, the mortgage companies offered it through a life insurance company because mortgage protection is life insurance, just different types. So if it's offered through the mortgage company, chances are it was back in the day, an accidental death benefit. It paid out to the mortgage company and it cleared out your mortgage if you died by a certain form of accident. Okay, not usually full coverage. If they were full coverage, those mortgage protection plans, declined over the time with the value of your home. So as your home went down, so did your coverage amount. Okay, so those are some of the traditional mortgage protection plans from way back. Well, the name kind of stuck, and today things are very different. A lot more options. It's not offered through the mortgage company. It doesn't pay out to the mortgage company. Now these are independent policies. They act a lot more like life insurance, and in some cases they are straight life insurance plans, but with some extra benefits where we can get them. You see, the biggest problem, or one of the biggest problems that people have that causes them to face foreclosure is an illness, death, I'm sorry, not death, but a major illness like cancer, a heart attack, or a stroke. Living benefits are a huge part of mortgage protection today. It's an independent policy now. So if you change loans, if your home sells, or if you refinance, or if you move jobs around, it doesn't matter. The coverage is in place because it's independent. Doesn't any longer pay out to the mortgage company. It pays out to your beneficiary so that person can use the money to then pay off the house or make payments for a period of time, whatever. So there's a lot of confusion about what mortgage protection is. And I hope this clears it up just by understanding the history of where it came from and how it used to be offered. In about 2008 or 2009, the government made a lot of changes in the mortgage industry. And one of them was that they stripped out their ability to offer mortgage protection at closing. So now you get it after closing. And some of those old ideologies and ways of thinking about mortgage protection have stuck today. But today, in my opinion, it's very different, but also much better than it used to be. So with that, hopefully that clears it up. If you do want to look at mortgage protection options for you or your family, don't hesitate to jump on my calendar and let's you and I chat and see if there's something here that makes sense or if I can help. Thank you and have an awesome day.